Of you, I remain your very own Mr. Cloud Oleka. So today I'll be teaching you all the common mistakes traders should avoid. This is very important because I know most of you have made these mistakes and it has cost you a whole lot. So these are the common mistakes that you should avoid as a trader, and I will guide you through the lessons. Just make sure you watch the video to the end and you would learn a whole lot. So let's proceed. So the number one common mistakes that traders make is what we call excess leverage. Like lots of you interested in using leverage. So excess leverage will ruin your trading journey. This is one of the things you should know because leverage is going to give you wins in trade, but it's still going to blow off your account because the trade can go against you, and because you are using leverage, you will definitely be in great loss. So looking at this chart now, sorry, I was analyzing this market and I have to remove all my drawings. I have to remove everything. So now most people are very crazy in trade. Like they just end up doing whatever they want to do without even really understanding what they're doing. So me telling you to not use leverage, I'm not trying to stop you from making your money. But even before you use leverage, you should know exactly what you're doing. You should know what the market is trying to tell you. Like now, looking at this trade now, if we pull out our trend line, this trade now is in an uptrend. If we pull like this, we would see that this market is in a clear uptrend. You can see that this market is in an uptrend, a very powerful uptrend. So when you understand this now I already know it's an uptrend, but somebody who is a beginner might not know, and the person will go and start shorting this market. So the dangers you're going to do now is shorting this market, because all we are experiencing in this market is the higher highs and the higher lows. Like the higher highs, higher low, higher low, higher high, higher low, higher high. You understand? So now most of you now will be like, oh, what is this market trying to say? This is just, the market is just telling you it's in an uptrend. So even if you want to use leverage, try to use leverage in an uptrend. Try to use leverage when the market is going to go in an uptrend. I created a special video for this topic, so you can click the link below to watch this leverage video. It's very important because even before you use the leverage, you should know the dangers of using the leverage, because the leverage can give you quick success and the leverage can also give you quick failures. So whenever you understand the trend of the market, what is it telling you? That this market is in an uptrend. So what importance does that have to offer to you? It's simple. It's telling you that only look for buy long opportunities. Always look for candlestick patterns that indicate that the market is going to continue the trend. The market is going to go uptrend, either a bullish break or a hammer or a bullish engulfing, to show you that, oh, this is an uptrend. So it's important you understand this. So avoid using excessive leverage. I see lots of brokers offering 500 to 1 leverage. 500 to 1 leverage. One of the things you understand about trading is that whatever trading we are doing what we call probability with high result, with high chances, with high opportunities. For instance, now I understood that this market is in an uptrend. So whatever I am doing here now, I'm just only focused on getting the uptrend of this market. I'm just only focused on making the money out of this market. So whatever you see me doing in this market, I am focused on buying opportunities more than sell opportunities. But I could also work on sales opportunities. That is if I have this my trend channel. Like now, this is no longer a trend line. This is now a trend channel because I have support and I have a resistance. So I could say, okay, if this reach this place and close resistance, I sell shorts, comes below here at any time, or breaks this line and close back in this line, I buy long. So looking at this now, this is clearly telling you that the market is in an uptrend. So most of the times, most people now don't understand this. Maybe they would come to this level of the market and see this red purish engulfing, and they would just say, oh, the market is going to crash. Then they sell short at 500 to 1. So what will happen? They will blow off their account, because Using 100x leverage, the market just have to move 1% for you to blow off your account. But using this leverage, that the market just have to move at 0.5 or 0.05%. So it is very risky. So even if you want to use leverage smartly. Just like now in this trade now, I understood that from this level, the market is giving us an uptrend because we are getting the higher highs, higher highs and higher lows. So looking at this now, we can clearly say that okay, this market is in an uptrend. So if I see an opportunity close to this level and I want to buy long, I have a clear chance. I can even decide to use the 5, the 10, or the 20s leverage because I am more certain based on the trend of the market that this is going to go very high. But most of the time, you can still be following a trend and an event can happen and the market will just crash on you. So even while you use leverage, you should be careful of the leverage you should use. I would always advise my students never use anything above the 10x leverage, because for you to blow off your account using the 10x leverage, the market will have to move at least 10%, and 10% move in a trade is not common. We don't get to see the market move 10% in a day, so you would not blow off your account, because even for you to even use the 10x leverage, you already have a proper stop loss. I can go into 10 to 20 different trades and I would not even go quarter of my account. Like I would not even have blown even 20% of my account. Why? Is because I know the right leverage I'm using. I know the right risk to reward I'm using. So it is very important. I know most of you, all these brokers, they tend to attract you with good leverage. But now if you do not know what you're doing, if you do not know how to use leverage, when to use leverage, you would be at risk. You understand? So it's good you learn, you know a strategy. So when you're using your leverage, you are confident that okay, this is your strategy. If this market plays based on your strategic analysis, you are going to be profitable. Then you can decide to use 10 leverage, 20 leverage, 50 leverage, 50x to go into that trade, which is using 50 times your size to go into that trade and make a kill. But now you do not know trading, you don't even know analysis, and you just want to jump into the market and make money out of the market. To me, I would say that is silly. So the next thing you would know now is no risk management. It's very important you understand risk management, because when you know what risk management is, you tend to manage your account well. So what is the importance of risk management? What kind of risk management should you use on a trade? It's very important. I always tell my students never risk more than 2% of your account size on any trade. So what does that 2% means? So for instance now, I will say I am I have $100. So let me just go into the chat and explain to you guys what I really mean by this. So let's go into the chat now. So now I say do not lose more than 2% your account size on any given trade. That is very important. You should know this. When I say do not risk 2% of your account size, let's say now your account size is $1,000. Sorry, don't mind my handwriting. So this now is $1,000. So now I say do not lose 2% your account size on any given trade. So what does that mean? This is very simple. It means that in a trade you're going to go, your risk, the risk is simple. The amount you're going to lose should be just 2%. So what is the 2% of 1,000? It's very easy to get. The 100% of 1,000 is, the 10% of 1,000 is 100. The 2% should be 20 because the 1% is 10. So what I mean is, this is it. So if you have $1,000, your account size is $1,000. Do not lose more than 2%. So what does it mean? It means that let me just analyze with a live chart and show you all what I'm trying to say. So looking at this chart now, you will see that we have at this level, we have the, let me just show you all something. Let me just make it easy for you guys now. So this is my, let me measure something. So I will show you all something. So in this market now, I want to buy long in this market, because this, I thought this is an entry confirmation, because this is a bullish engulfing and a bullish close, and this is at the level of support. This is a very, very sweet. I like it when my entries are always somewhere close like this. So now you do like this now. So when I say 2% your account size now, so now this is it now, because I will teach you all how to set the proper stop loss. So this thin line now is going to be my stop loss. So you see the level I made my stop loss. I'm going to change it to red, and I'm going to make it tick. So I'm trying to make you all get something, so just be with me. So looking at this chart now, I have $1,000, and I am hopeful that if it gets to at least an area close to the resistance, which is somewhere here, because that's where sell pressure will come in. So I say if it gets to somewhere this level, I will be out of this trade. So looking at this market now this is a 0.58. So let's say you are using 4x leverage. So let's calculate now. So it's very simple to calculate this. I want you all to just pay attention to what I'm going to calculate. It's very, very simple. So if you want to calculate this now using 10x leverage, this is going to give you 5.8. So all you just do is 10 times 0.58. Very simple. So I just showed you something. If you want to calculate this now, if you want to know how much you're going to lose in this trade now, so with your leverage, you can calculate it. So for instance, now I want to use 10x leverage. So I will say to myself, 10 now multiply by 5, 0.58 is going to give me 5.8. So this means that in my trade, whatever trade I go into, I am going to lose a 5.8%, which is a 5.8% in any trade I go into using the stop loss. So why did I use the stop loss? This stop loss area now is far from the area of value, so that's why I'm using the stop loss. I still have a topic on that. Make sure you check my channel, watch the topic on area of value. So now I'm trying to make you all understand proper risk management, though I have a full course for this, but I'm just trying to make you all understand this. So I will calculate this now. 5.8. Remember, I said do not lose 2% your size, because now I have $1,000. This is the best place for me to have my stop loss, but I do not want to lose more than what 2% my account size. So what will I do now? I will try to check on the 4x leverage. So if I use the 4x leverage, I will say 4 times 0.58. So that is going to give me 2.32, which is still about 2%. So now I would not use the 10x leverage. I would instead use now the 4x leverage. So now if this trade goes against me now and I'm using $1,000, I'm going to lose just 2.3% of 1,000. That is over 20 something dollars. You understand? So you see, my account is still looking healthy. But now if this trade now goes in my favor and I end at this level, like if you can see at this now, you see I end at this level, and this is 2.7. So now I would say 4 times 2.7. So I made 10% win, and I'm risking 2%. So you see, my risk to reward is great. In the video I dropped teaching risk to reward, make sure you watch it, because after you watch the video, you are definitely going to see the market different. So now most people do not have a proper risk management. They tend to, if they're going to this trade, they use 100x leverage. I remember, if you're using $1,000 and you're using 100x leverage, you are risking all your account's size, because you did not have any stop loss. The first thing every trader should learn is how to use the proper stop loss. That is the most important thing every trader should learn, because when you learn how to use the proper stop loss, there are some silly mistakes that you will not be making again. There are some silly mistakes in trading that you will not make again. So now this is the topic now. So Learn your risk management is important. How is it important? Before you go into any trade, always check if this trade goes against me, how much will I lose? People are more focused on profits than losses, so they end up blowing off their account. A successful trader can go into 10 trades and lose 6 and win 4. Looking at this trade now, I am risking 2% to win 10%. If this trade goes against me, I've made 10%. If I go into 10 trades using this strategy, using this pattern, using this concept, you would realize that I will make more over time than I have lost. Do you understand? So your risk management in trading is very, very important. So you should be mindful of your leverage. You should be mindful of your stop loss. The area you put your stop loss. Like now, looking at this now, I initially wanted to use the 10x leverage. But now if I put my stop loss here for this trade to play out, you would realize that I will be risking 5% my size. And I do not want to risk that. What did I now do? I reduced my size to 4% for 4x leverage, which now makes me lose 2% of my size. So if this trade goes against me, I lose 2%. If it goes in favor of me, I make what? 10%. You understand? So my risk to reward ratio here is 3 times my risk, which is 3.7 times my size. So what I intend to get out of this trade is 3 times my size, 3 times my risk. So now I am losing 2% and I am chasing 10%. So if this trade goes in favor of me, I make 10%. If it goes against me, I lose 2%, which is I lose $20, which means I still have a balance of $980 to still trade this market. Do you understand? So this is a very good risk to reward concept for me. So let's proceed to the next thing. Using their life savings. This is a very important topic. So it's very important. I tell people trading is going to offer you lots of opportunities that you have not imagined, you have never imagined. I can tell you that trading will make you financially free, but do not quit your job and say you want to start trading full time if you're not a profitable trader. This is a mistake people make. They quit their job or they've learned a strategy and they jump and start trading. While you still work, still trade. Then over time, 6 months, 1 year, 4 months, if you've seen that you are profitable trading, then you can trade. Even while you're trading, do not use your life savings. This is very important because the market is controlled by emotions. When you use your life savings to trade, you are triggered to put in pressure on the market. You start beating the market. What do I mean beating the market? You start trading every second, every minute. Why? Because you want to make money, because your life depends on this. So even while you trade, for you to be relaxed, still have other things you're doing. Those other things will cover up for the small losses you will face, because regardless of how professional you are, they are going to be losing trades and they're going to be winning trades. This is 100% certain. There must be a losing trade, there must be a winning trade, regardless of how professional you are. I do not care to know how professional you are. What I'm telling you is they're going to be losing trades and they're still going to be winning trades. So the next thing we're going to look on is borrowing to trade. I tell people, do not borrow to trade. It's very important. Why will you borrow money to trade? Now the whole risk is on you. And it is not good. Why? You will have to add too much pressure to the market. Why do I mean this? Borrowing to trade and having people invest in you to trade for them is different. This is why it's different. When people meet you and tell you, hey, mister, I have $50. I want you to trade for me and give me something at the end of the month. You will tell them that trading comes with risks. There are times that you're going to be profitable. There are times you're going to have winning trades. There are times you're going to have losing trades. So if this trade now goes against me, against my concept, against my strategy, against my analysis, and I end up blowing off your money, we bear the risks. you are going to be fully responsible for the risks. That is why even if you open any trading app, Binance app or whatever trading app you open, they will tell you that the market is highly volatile. Make sure you trade with an amount you are willing to risk. Why do they put this caution there? It is so if you intend to be stubborn and you use all your life savings, borrow money to trade, and you blow off the money, they are not held liable for your losses. So it's important you do not borrow to trade. Instead, people should invest in you to trade for them. And before they do that, they should understand the risks. They should understand that trading can be very risk, can be uh, of high risks, in the sense that you can lose their money. But you as a professional, it's going to take you more than, at least if you're trading with 100%, it's going to take you, let's say you're losing 2% per trade. That means you're going to lose 20 trades straight before you blow off someone's capital. 20 trades straight, which is not possible. Because even if you lose 5 losses and you have 5 wins, as a professional, your wins are definitely 3 times your size, which is if you're using 2% loss per trade, your win per that trade should be 6% win or 8% win. So you see, so your 5% win should be about 30% win. Your 5% loss should be about 15%. So at the end of the day, you realize that you are still a very, very profitable trader. Do you understand? So do not borrow to trade. People make this mistake. They borrow to trade. Instead, people should invest in you to trade. And you should first know what you're doing first. Do not just learn and jump and start using people's finance to trade. Never do that. Make sure you have mastered the act of trading first before you meet people and tell them to give you money to trade. So another thing is rushing the market, not allowing the market give you an entry. You are just rushing the market. So let me go into the chart and explain what this really means. So now I want to show you all why you should not rush the market. So this is our lines. I'm still going to adjust them to get proper touches and most touches, because okay, so okay, I could only get this area of resistance. So now what people do is this: they rush the market. So why do you rush the market now? Now, the first you should understand is that even while you have your support and resistance line drawn, you should know the dynamics of the market. You should know what the market is trying to do. From this level now, looking at this, you would see that the market has been in an uptrend. So if we go from this level, we'll see that this market has been in an uptrend. You now check it. You move from year to year. You've climbed up now. If you move from year, if you move from year now to year, let's say this line now from year to, what do you mean? You've come down. You came down. From year to year is down. Year to year is up. So looking at the market, you understand that this is an uptrend. So what do I mean rushing the market now? There are some people now, there's some traders now that are impatient. So when I mean impatient, what do I mean? This is a trade now right in front of you, and you just have your support and resistance line drawn, and all you're doing, you're shorting resistance. Just like now you saw this now approach resistance, this now you now short the market. What's giving you the go ahead to short the market? Because even if your trend line is drawn, there is no go ahead to short the market, because this is not any confirmation entry. This does not give you any confirmation entry. So why then are you shorting this market? So because you want to make money, because you don't even know what you're doing, you start rushing the market, you start beating the market, you start shorting the market. So if you had short this market now, what will happen? You see, the market is still trying to go uptrend, because the market has been maintaining from this level higher high, higher low, higher high, higher low, higher high, higher low. So the market is still maintaining an uptrend. So what is giving you, Mr. A, the go ahead to short this market? Why are you rushing the market? Why don't you just allow this market play out for you? Why don't you just allow this market break out of resistance now and give you an entry confirmation, which could be a bullish close, a hammer, or this market now is telling you we are bullish engulfing, let's go. You understand? So do not rush the market. Most of the times people want to trade 10 times in a day. Let's say now I'm buying resistance, selling support, or sorry, I'm buying support and selling resistance. You will see at this level, I got one entry, I got two entry. You see, I've not gotten any entry again because the market is consolidating up at this resistance size. What is this telling you? If we do not see a massive break down here, if we do not see a massive bearish close down here to crash this market down, Bitcoin is going to go up. What am I trying to tell you? If we don't see a large bearish candle, very, very large, very, very large, like the size of this. If we don't see the size, this market is not going to crash. This is immediately that the buyers are pushing the price higher gradually. The price is going very high because the buyers are in control. So these are things that you should know before you decide to trade any market. You should try, even if you've drawn your overall support and resistance, because in this market you can see that we've had a whole lot of support and resistance current uh before this current one, you would see. So now again, if you look at this market again, you would realize that even in the midst while we have our support and resistance, we still had a trend line. So looking at this trend line, you will see that this market was already telling you that this is an uptrend. And when the price got to this level, the price started consolidating before this shoot up. So now looking at this current market again, even if you want to draw, you would still realize that this market is still telling you that this is still what? An uptrend. This is still an uptrend, a clear uptrend. Do you understand? This is still a clear uptrend. So even while you have your support and resistance line drawn, you should also have your trend line. So now you know that this is an uptrend. So what are you looking for in this chart? You're looking for what? Buy opportunity, no longer a sell opportunity, because there is no indication that this is going to be a market that because even if you had seen this, yes, it's still good that you can sell, but your risk to reward would not make sense, because looking at this level now, if you want to set your stop loss, it should be above this highs. So now looking at this now, your risk to reward in this trade is useless. Let me show you all something. You want to make an entry after this, so your entry is going to be here, your stop loss is going to be here, and your profits, you're aiming at somewhere close to this place, because that is where pressure is going to come. You see, your risk to reward is useless, which means you're losing one to get one. It's not a profitable trade. So you would leave this trade and instead look for buy more opportunities. That is what you look for in this market. So now this market now, like I said to you all, I'm not prophesying, I'm just telling you all, based on how the market is playing at this level, we should be expecting an uptrend if it breaks out of this line. But if we want to see a downtrend down to this level, the bearish close must be very large, very, very large. If it is not large, this market will not crash, because Bitcoin is telling you that, oh, we are going high. If you still go on the higher time frame, you will still confirm this same thing I'm trying to show you. Look at the higher time frame. You will see that the higher time frame is still giving you what we call an uptrend entry confirmation. You see, the higher time frame is still giving you an uptrend. So there is no indication that you should short the market. Instead, look for opportunities to buy long so you can profit from the markets. This was a very sweet entry confirmation. This was a sweet hammer. You see, one good trade alone is very excellent. And if this is the hammer, this is your entry, your stop loss will be below here, and you see profitable, very profitable. You could write the markets, the choice is yours. So that is it. So do not rush the markets. Wait for your strategy to play out. If you have a strategy, wait for it to play out. If you are using the golden cross, I want to remove this. If you're using the golden cross and the dead cross, so always make sure that you wait for your market to give you an entry. Like looking at this now, you see, okay, your market give you an entry here, a bearish, a bullish close, you can go. Yeah, you're waiting, you got an entry again, a bullish close, you can still go. So wait for the market to give you an entry. Wait for you to get a clear entry of the market before you go into the trade. Okay, so that is it. You understood what rushing the market is. So do not rush the market. Have a strategy, master your strategy, wait for your strategy to play out. So the next thing we're going to look at on is using too many indicators. This is one of the things that I do not like. I do not like this. If you look at my chart, look at my videos, watch my previous videos and everything, you will see the only indicator you're going to see is the MA indicators, which is either the EMA or the MA, the 50 or the 20 or the 200. My chart is always simple. Even when I'm having my lines, it's very simple. Look at what some people do in their charts. Just look at this. Look at what this person just did. So people now, you would see their chart like this. This chart now in front of you is a very crazy chart. Why? Is because you do not even understand what's even going on. Because this is silly. This is silly because you're confused. You're using the RSI, using the MA, using the CPR. Oh, you want your result to be very powerful, very strong, very. You do not use all of this. Do not use all of this. I'm going to drop a teaching on when to use indicators because there are times the MA is going to mess up with you. The time the RSI is going to mess up with you. So you should know when to use indicators and when not to use indicators. It's very, very important. So always leave your chart very simple. If you look at my chart, you would not see any of this. I don't use all of this. I don't use any of this. I would just have my favorite indicator in place. I would have it again in place. I would just have the setup, make it my 50. I could make it my 50. Change the color because of the other one. So I'll just make it green. I'll make it bold and I'll make the other one my 20. So when you look at my chart, most times you can see these indicators in my chart, or you will just see no indicator. You will just see only trend lines like this because this is when I want to trade pure price action. This market is very, very sweet market to trade for real. Like this market is going to be a very, very crazy market because if you notice Bitcoin tried here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. You see, the market is trying to boost. The market is going to boost. Like the boost is going to be crazy, like very, very crazy. So you see, my chart is very simple. Now I understand what I'm doing. Now I'm just waiting for this market to maybe break out of this. I get a bullish close, or a hammer or something, then I can buy long this market. You see, I already know what I'm looking for. I cannot short this market because it's going to be against me. Me shorting this market is me fighting the trend. Like I tell each and every one of you, never you fight a trend. Never. Always go with the trend. Always go with the trend. You will see in this market, if you've been looking for only buy long opportunity, you will see that you've been getting some very pretty good entry confirmations. You see, very, very pretty good entry confirmations. You will see very pretty good entry confirmation. So if you had seen this, you would have made like, let's say one winning trade, maybe you ended somewhere here. The second trade, maybe you decide to be conservative, you ended somewhere here. The third trade, maybe you ended somewhere here. The fourth trade, maybe you ended somewhere here. The fifth trade, maybe you ended. So you see, this now will be a little trade but loss because you'll be aiming at getting more profit. So you definitely end in loss. So you see that this is like 6 trades and 1 loss. So it doesn't matter. So you should always understand the trend of the market. What is the market trying to tell you? Very important. So I hope you've learned a lot. So we're just going to do a little recap and summarize for the day. So hope to see you next class. So if you've not subscribed or like my channel, make sure you do that because I will keep dropping very, very interesting videos that's definitely going to always blow your mind, get you glued to your screen and make you learn more about trading. So let's proceed so we can round up. So I said excess leverage. It's very important you know this. Do not use more than 10x leverage. Do not, even 5x, depending on your risk to reward. Now I say no risk management. That is one of the mistake people are making. No proper risk management. You have $1,000 and you don't have a stop. You don't have a stop loss. You're just jumping into the trade with your $1,000 and you end up blowing off your money. Who is to be blamed? You. So using your life savings, do not use your life savings. Do not quit your job because you want to trade. Do not use your life savings. The market can go against you. Borrowing to trade is very risky. Instead, people should invest in you to trade. And before they invest, tell them the risks. This could be like this, or it could be like this. But I'm a professional. I'm going to do my best to make sure that you get 20% or 10% of your return on investment monthly. 20% is really crazy. 10% to 5% a month is okay, because even the bank will not give you 10% in a month, no matter the investment you've made. So now do not rush the market. Have a strategy and follow through your strategy. Very important. Have a strategy, follow through your strategy. Number two, using too many indicators. Lastly, using too many indicators is risky, because too many indicators are giving you too many informations. The RSI is giving you a crazy information, the MA is giving you crazy information, and you are making crazy trades. So please do not use too many indicators in your market, because when you'll be losing your money in your trades, I will not be there with you. I will not be there bearing your loss. So do not use too many indicators. Okay? Okay, so I hope you've learned something from this. So avoid these trading mistakes. Avoid them. Very important. I remain your very own Mr. Cloud Laker, and I hope to see you all win. And I hope to hear you testify that, oh, you're really learning a lot. And see you all in the next.